What's up everybody? Welcome to the Stocks channel. My name is Cory and today we complete the bull trap coming all the way back down to support. So the question is, will the market flush through the support level or did we just set up another bear trap? First up, let's take a look at the S&P 500 SPY ETF. So let's crack open this chart and see what's going on in the stock market today. Alright, so today in SPY we were down 4.35% after we saw a very large gap down and flush down to critical support. And I did leave my lines that I drew on the chart from yesterday where I told you I thought we would go a little bit higher to set up the bull trap and then flush back down to support to possibly set up the bear trap. So before the data dropped this morning, there was a little bit of a gap up in the futures market, and that of course was the bull trap before we saw this epic drop. So remember, the market loves to hurt the majority, and this rally was making a lot of bearish people starting to become bullish because obviously as price action is going higher, they're going to get FOMO. Today, put those chasers in check by instantly punishing them for chasing and possibly even flip them to bearish yet again. So this is the exact sentiment I was talking about from yesterday's video. And if we go over to the SPX weekly chart, we can see on Sunday I also drew out a very similar pattern. Now the question from here looking forward is, now that we have completed the bull trap, is the sell-off today just a bear trap, or are we about to see a major flush in the indices? So we're going to take this step by step and we're going to look exactly at the critical levels and we'll let the price action do all of the talking from here. So first things first is that we did come back down to critical support, which is going to be this zone in SPY right around 390 to 393. 393 is the support trend line and 390 is the risk level that we need to stay above, otherwise we are very likely returning into the bear market. So for that reason, the market is still incredibly simple. You can stay risk on above SPY 390, but instantly need to get risk off if SPY breaks down below 390, because we could see selling pick up and start to see very high volume selling capitulation. So SPY below 390, you're looking for these gaps to fill at 379 and down here right around 369. And that is going to require the breakdown below 390, and that should start liquidating a lot of long positions as bears step in and continue to push price action lower. Now, if we bounce off any of these levels between 390 and 393, that is going to tell us that this was likely just the bear trap, but we will want to see confirmation with a second day closing back over the resistance trend line at 402. Above 402, we'll be looking for the gap that opened today to fill, which is just below 409. And then if we can take out this daily high around 411, that should tell us that we now have the higher high after putting in the higher low. So you just need to take it day by day, but there's really only one level in SPY you need to pay attention to, and that is at 390. So do not overcomplicate the market. It is really that simple right now that you can stay bullish above SPY 390, but instantly need to get risk off and bearish below 390. So that's really all there is to it. There is no reason to overcomplicate it and go into any other details. So we are going to need to see more price action to know whether or not this support zone is going to hold up or is it going to fail and we're going much lower. Nobody knows for sure, and that is why I teach you to follow price action and manage your risk. On the NASDAQ 100 triple Qs, we were down nearly 5.5%, and just like SPY, the triple Qs came all the way back down to critical support, which is going to be this level at 293. Below 293, the floodgates of selling open up, and we're going to instantly flush down to fill the gap at 287. And if we lose support at 287, you're looking for a retest of 280, and then the June low right around 269. So for that reason, you can stay bullish above 293, but instantly need to get risk off if that support fails. And the resistance level to break is going to be 302, and then the gap fill right around 308, and breaking the daily high right around 311. On the Dow Jones, we were down 3.96%, and the Dow Jones lost some critical support, losing the support trend line and the support zone at 315, and we're back down to testing the previous low right around 312. So in the Dow Jones, if we break down below this level in the 312 support zone, you're looking for the gap fill just below 307, and below 307 you're looking for a retest of the June lows right around 298. So watch these critical support levels very closely, and the Dow Jones will need to break back over 315's resistance and right around 319, and then we could start to go fill that gap right around 323. On the Russell 2000 IWM ETF, we were down 3.91%, clearly getting rejected from that resistance and coming back down to our support zone right around 183, and below that we have strong support right around 178. Below 178, look for a retest of the lows all the way down here at 164, and the bull breakout will require a break above 186 and the gap close at 188 and the previous daily high at 189. On the ARKK ETF, we were down 6.79%, losing that support level yet again at 43 as we did fill the gap to the downside. downside, but we also did open a gap to the upside. We have gaps at 44.5 and 47, but we are currently below the support at 43, which means we could be coming back down the support at 40. It's a bear market in the ARK ETF while we're below 47, so continue to expect more downside until we can break back over 43 and then look for the gap fill above. On the VIX, we're up 14.33%, and the VIX is continuing to spike and forming a higher low and now a higher high. So this is exactly the type of risk-off behavior you need to see in the VIX to tell us that we could be going lower. So while VIX is above 24, you need to stay risk off and prepare for more volatility, especially if we lose those critical support levels in the indices. The VIX could be spiking into the 30s from here and continuing into the bear market, so do keep that in mind. And the VIX is only bullish if we can see it crushing down below 24. On Bitcoin, we're currently down nearly 10% as Bitcoin is getting rejected around the resistance trendline, and we're back down below the support level at 21,600, which was the bullish breakout. We're testing the previous breakout right around 20,000 currently, and that is going to be bullish if that breakout does successfully hold as support, but we will need to see Bitcoin getting back over 21,600. It's going to be plenty of volatility, but it is possible crypto winter ended on September 6th, so use that risk level at 19,000 because if we break that, you will be looking for the next leg lower at 17,000. On Amazon stock, we were down 7.06% as Amazon rejected that resistance zone right around 136, and we did get the gap down and flush all the way back down to the resistance trendline, which is the support zone right around 126. If we lose 126, you're looking for the gap fill just below 123, and below 123, we could retest the lows right around 115. On a break above 128, we'll be looking more bullish for the retest of 133 and the full gap close at 134. On Microsoft stock, we were down 5.5%, and Microsoft is all the way back down to critical support after rejecting critical resistance in just one swift motion. So watch this critical support at 252, and if that breaks down, you're looking for 242. Above the resistance level right around 256, we could go fill that gap at 265, but we need to break above 267 to 268 to start looking bullish. On Nvidia stock, we were down 9.47%, losing that support zone at 134 and getting very close to the next support leg lower at 129. We have a gap to fill to the upside right around 142, but that will require the break above 135. And if we can close that gap and continue higher, you're looking for strong resistance at 145 and the gap fill at 150. If we lose the support at 129, it's no man's land lower because I don't have any strong support levels below that level at this time. On Tesla stock, we were down 4.04% as Tesla did get rejected around this level at 304 and came back down to the 20 simple moving average, but did not fully fill the gap to the downside just below 290. So we have a gap below and a gap above, and it's anybody's guess which gap fills first, but while we have the rejection, it is possible we do fully fill this gap to the downside. If we break down below 290, look for the next support leg lower at 283 and then a retest of the low right around 270. To the upside, we need to break back over 297 and then we can fill the gap at 300 and then look for that daily resistance right around 304. On Apple stock, we were down 5.87% after getting rejected from that triple resistance I was talking about yesterday, which was the gap fill, the 20 simple moving average, and the resistance trend line. Shorts are going to take that short trade 9 times out of 10 because we are in the downtrend right at critical resistance, and that is why the sellers had so much power today. We did break the support level at 154, so look for the next leg lower at 151.5, and you're not getting bullish until we can break above the resistance trend line up here at 162, or you're setting your risk at the support levels below, which is right around 151, and taking your losses on a breakdown below that level. On the financial sector, we were down 3.72%, coming back down to the resistance trendline breakout and testing that level as support. The industrials were down 3.77%, coming back down to support at 92, and we are below a negatively sloping 20 simple moving average with a very large gap to fill to the downside. The healthcare sector was down 3.3%, coming back down towards that support right around 126, and so far it still looks possible that we could be building out the right shoulder on this daily inverse head and shoulders. The energy sector was down 2.52%, breaking back down below the 20 simple moving average, but still above the support trend line right around 79, so instantly get more risk off if this support level fails. So jumping back over to the S&P 500, without a doubt, we are right back to critical support, and we're going to know very soon if this is just a bear trap before we start taking off to the upside, or if we're going to lose that critical risk level at 390 and re-enter the bear market. Let price action do all of the talking, know both scenarios, and then act accordingly, and always manage your risk around these critical risk levels. Also, don't forget I still have 50% off promotion code for your first month of bank trade alerts. All you need to do is apply the coupon code Labor Day, all one word, no spaces, to get 50% off your first month of bank. I think now is the best time to try out bank trade alerts, especially with the discount. Also, if you're looking to be a better price action trader, consider joining us with the Stocks Channel Trading Discord community, where you get access to all of my intraday updates and analysis. You can find out how to join by clicking on the link in the description of this video. So thank you for watching, everybody. I hope you're crushing this market. And as always, I will see you in the next episode.